What is going on, everybody? Welcome on into the TC Trading channel. So in today's video, we are talking about the gap strategy. Now, we're not talking about the overnight gap trade strategy because sometimes that's a little bit more risky, right? When you're holding a stock overnight, holding options overnight, swing trading, you're at the mercy of the market at times. So we're going to be talking about a strategy that you can use for swings, but also especially for day trades to take advantage of some of the wild price action swings, or maybe not even a wild swing, but you can use this strategy, use what we're looking at on the chart to identify your risk reward, your price targets, and so on. So make sure you're staying tuned. This shouldn't be too long of a video. We'll go through some examples talking about how this strategy works out and where you need to make sure you're looking to buy and where you're looking to sell, because it can be very easy to try to preload or try to get in before we get into that gap or before we make that move, cross that trigger point. But it's very easy to front load and end up on the wrong side of the trade. So we want to make sure we're staying patient here. So make sure you're staying patient, hitting that thumbs up button, and sticking with us here to the end of the video. We'll keep it short, sweet, and to the point. So first off, what is it? It's a trading strategy that we're going to be using to simplify our trading, okay? It'll make it a lot easier to spot support, resistance, those breakout points, breakdown points, because this strategy will work whether you're trading long, whether you're trading short, whether you're trading calls, whether you're trading puts, right? It's going to be great for really whatever you're looking to trade, no matter if it's to the upside or to the downside, okay? It's going to make it a lot easier to get those trigger points, profit targets, set stop losses, and plan your trades before you ultimately make them, because this is great to look at overnight before the markets open, right? To plan your trade before you can actually enter the stock so that you have your plan, you have your breakdown, you have your strategy, you know your levels, and all you have to do once the markets open is execute your trading plan, keep your risk to a minimum and your reward to a maximum. A couple keys before we dive into those examples here in just 1 second. This strategy, of course, is not 100%, like no strategy is, okay? It's the stock market, right? If everything was easy, if we can predict everything, this wouldn't be possible, right? We know that 90% of traders actually are not making money. 10% breaking even, 80% losing money. That 10% that are making money consistently is where we want to get to, but you have to understand that no strategy is 100% accurate. Once you understand that, it's going to make things a lot easier, because then it comes down to your risk management. As long as you're managing your risk, putting yourself in positive risk rewards, you're going to be looking at a good situation longer term. You want to stick to your trading plan and create that watch list. Now, we like to talk about this because if you just have a collection of 5, 10, 15, 20 stocks, whatever fits your kind of needs, whatever you're comfortable with, you don't have to worry about FOMO, about this stock, that stock, this new stock today, a new stock tomorrow that everyone's talking about on Reddit, on Twitter, or wherever. It doesn't matter. All you have to focus on is your stocks, the movements up and down, and it's actually better that you do that because you'll be a lot more familiar with those stocks that you've been following. You'll know their key levels. It'll be easier to see, oh yeah, this stock likes to always dip in the morning and then recover in the afternoon. This stock always likes to pop and drop. Like, you'll have a lot of these kind of characteristics, right? The personality kind of these stocks in a sense, and it will make this strategy so much easier. So let us dive on into the strategy right now in the video. The first thing we're going to do is we're going to be using a platform, Webull, right here. We'll link it down below, and we use this platform all the time when it comes to trading, and we'll leave a link down below to get 2 free stocks when you sign up and deposit $5 with the brokerage platform. And if you have any questions on how to use it, this channel is great because we got a great playlist. We got tons of videos going over lots of different aspects to Webull, broad overviews, desktop, mobile, active trade, plenty of that stuff where it came from here on our Webull playlist. So check it out if you guys are interested. So look at this chart right here, and you might be thinking to yourself, what do we got? Got a bunch of lines. Don't worry about the lines. These are areas that I have kind of had as key levels in the past for Fisker stock. FSR is the ticker. But what I want to point your attention to is this gap on the chart. And I think it's really, really interesting to note. Take a look at this gap right in here. Now, first off, let's identify what a gap even is. And then how do we even trade this? So let's do that really quick. Now we're going to zoom in so we can see this nice and big. Now, a gap on the chart, we're referring to the 1 year, 1 day. So the daily chart, as we like to say, where each of these candles is 1 day. And we are currently using hollow candles. We have a video going over what hollow candles are, how to use them, how to interpret them here on the channel already, if you're interested in learning more after this video. But essentially here, we have a gap where on the 1 year, 1 day chart, if there is movement in the after hours or pre-market hours, that's not going to show up on this type of chart. If you're looking at a 4-hour chart, 1 hour, 30-minute, 5-minute, 1 minute, they'll show up what happens in the pre-market and after hours. For example, if I go to a 4-hour chart right here, we'll have different shadings showing us, their different classifications. So for example, the darker shading background, that's regular market hours, and the lighter shading background, or the kind of the more blue shading background, if that's what it kind of looks like, that's what's happening in the either after hours or the pre-market hours. So the daily chart kind of filters out that noise and just shows us what happens during that specific day that the stock was trading. And we notice that we have a move from about $15 down here. That's where the stock closed on the 9th of August. And the next day, it actually opened up here over $18. Then it had range. The wick had range down to $17.26 and range up to $19.48. But we actually ended up opening up here. And the gap in between is up from this level right here all the way up to that range of the day. So there is an empty space on this chart. If you guys can understand what I'm talking about, from 15 all the way up right into here. So this is our gap, that we have an empty space on the chart. And that there's no history there. We just, this is before this red candle to the right, before this even came in, there's nothing there. So what we like to look at when it comes to playing these stocks is we like to play the gap fill, okay? Many times, now of course it's not 100%, but many times gaps like to get filled. And so it's very easy when you have news also driving a stock and more volume, which we got. We got some interesting price targets out to the upside, which sent Fisker up. And then we had some news of some dilution the next couple of days, which sent it back down, which ended up making it a really nice trade. And we'll show you another example of a similar situation here. But we're talking about this gap, and how do you trade this gap? Well, this gap presents us a really nice opportunity when it comes to support and resistance. And this played out perfectly, absolutely perfectly in just one day. We didn't even need to wait. This happened in one day, so you didn't have to hold overnight, have to worry about news coming out. It was a day trade that I was able to take advantage of, and that a lot of people I know as well took advantage of this move to the downside. So Fisker comes out with news of dilution the next day. Here it is. The stock actually opens up at $17. So the stock opens up the next day inside the gap. That was a good sign. I felt pretty confident that, hey, we opened up inside the gap. That's good. Now, what do I want to see with Fisker here? We actually got a little bit of a move to the upside at the beginning of the day where it did try to pop up towards that 1750 and then it fell back off. That was kind of my threshold. My threshold here was going back up in here and was going to be up towards this $18 at a key level of support resistance in the past, up towards 18. If Fisker got up to 18 and started to hold above, I was going to get out of this trade. But we start to look at the risk reward here, and where is my risk reward? Well, my risk would be just about 6% of upside if I was going to get out at that point. And my reward here was the gap fill, which ended up being over 11% in terms of downside. So you guys see in this situation, I'm playing the downside. I actually played short shares, and I also played put options for this specific move. Now, what was I targeting on Fisker to the downside? Well, I was targeting down towards the gap. Now, I was also looking at this area right up in here, this $15 and looks like 65 cents, as it was an area that we double top. We have two tops of candles hitting that level. So that was a key level in the past as well. So I took some profits at that point. But the real final position was then taken off at $15 because $15 was that gap fill, and we got that pretty much that entire gap fill in just one day. So what are you going to be looking for when it comes to profit targets, stop losses? What I would recommend is that when we enter the gap, yeah, you could see movement back out of the gap and then back in, and that could be kind of that first few minutes of the market open, that kind of volatility. Don't be too alarmed with that. Give it a little bit of leeway. And for example, here I gave it a couple percent to the upside. Maybe I could have given it to the lows of the prior day. This candle right here, which happened to be around $17.70, that would have given me roughly, 70 cents of kind of leeway in terms of the upside. I would have stopped myself out if the stock started trading up over that level and held. And then my downside price targets, my ultimate price target was down towards 15. So I'm giving myself a lot more room to the downside. The problem a lot of traders make is that they'll enter this before we get into the gap. And that's the issue. In this case, we opened the day and we were in the gap and it was great and it worked out. but many times traders will enter the position a little too early, trying to front load their position, whether that's long or short, because they're anticipating a gap fill, and then you still get shaken out in coming days before we get that fill. So you have to make sure you wait for confirmation of getting into that gap and starting to push the downside. Then my profit target, right, my ultimate profit target, you can take profits along the way as you see fit, scaling out of the trade throughout the day, how the stock reacts. But my ultimate target was down towards the bottom of this gap fill, down towards about $15, and that ended up working out really well with kind of a whole psychological level as well. And also on the chart, we had some good support in the past up around this 1434, so it ended up kind of sitting up pretty nicely in terms of a rough area, give or take about $1 that it came down to. That was an area that in the past Fisker has shown to be support. The next example is going to be ticker symbol FUBO, Fubo TV. Take a look at this. Very, very similar situation. Actually, this is because of earnings. The stock gaps up here because of earnings, and then we have the opportunity for the gap fill. In this case, where's our gap fill, guys? If you guys can see right here, here it is. It's right in this range from about $30 down to about $29. Not a huge gap to fill here, but that's our gap fill that we're looking at here with Fubo, where there was no history, right? In recent weeks, in recent days, the stock made a move and we have no price action in that area, right? In that gap of $1. So, well, this situation, there was opportunity, and there's a lot more opportunity if you did get the top of Fubo's move, right? Which is great, but you can't always count on getting the top. You could have waited for the stock to come down and looking at a much higher percentage trade where Fubo started to fall back below $30. And when Fubo fell below $30, I took advantage of this and I had my targets down to 29. Of course, in this situation, it did fall a little bit lower, but again, that was a solid $1 move that realistically, right, doesn't sound like a big move, but a $1 move on this type of stock is about 3%. And, you could have done a lot better with options on that specific day. So there's tons of opportunity here with Fubo, and it's the exact same setup. It's a gap fill trade. Now, I want to show you an example of to the upside. We have one potentially setting up right here, but this one really hammers home why you need to be patient and wait for confirmation of entering the gap. That is NIO. NIO, the ticker. We have a gap down right here from about $40.61 all the way down to about $39.60. So about a $1 gap or so, again, on this stock, but a $1 gap is still a pretty significant move, a 2.5% move, which if you take advantage of 2.5% across shares with heavier size or options, there's a lot of money to be made on these moves. And so what we're looking at right now is an example of NIO popping up and getting up to that gap, but just could not break above. So we had examples where it got just 5-10 cents into the gap and then it fell right back off. So what you want to see in terms of getting in and getting out, right? Obviously hitting your profit targets, the top of that gap or bottom of that gap, depending upon the direction you're looking for a move, right? That's great. But in this case, that entry, we want to specify and narrow in our entry here. So when do we enter this stock? When do we enter the long side of a NIO trade here? We need to see NIO getting into the gap, so getting over about $39.75 and starting to firm up and holding over that level. If NIO gets above and then pulls right back, that's not a good sign. You want to see NIO get above and then pull back a little bit as it holds $39.75. If it does, boom, that's your trigger point, that's your go, and that's where you enter on the long side. And then guess what? Your risk is very, very small. If NIO falls out of that gap and starts to get weak and can't get and reclaim that $39.75, you get out with a very small risk, ideally here, 25-50 cents, where your reward here is looking for $1 plus that gap fill and maybe more if it does want to go further. So that's the gap fill trade. Hopefully this video was helpful. Let us know in the comment section down below your thoughts on the trade, how you plan to use it in your own trading. I think it's a great strategy for someone looking to play options. It's definitely a strategy that I have found to be very, very useful in my own trading. I personally like to just use shares. I feel a lot more comfortable going in heavier share size, long or short, rather than options, but I will dabble with options. If I see potential for a really big move, for example, that Fisker trade, the first one we looked over, there was a pretty big percentage move to the downside that I saw. So I felt comfortable with those options because I didn't have to worry about getting in and getting out super fast if it did make that move or that gap fill very quick. Whereas in NIO, it could make that move fairly fast because we were talking about a 2.5% move. Fisker, right, that was more of a 10% drawdown, which is a lot. It's not going to just drop 10% in 2 seconds or in 2 minutes or even 5-10 minutes. It's going to take the course of the day. And that's what we saw that happen. So I was able to kind of average into my options and then scale out accordingly. Thanks so much for watching. Make sure to hit that thumbs up button and subscribe to the channel down below. We'll leave links to any other resources, those 2 free stocks with Webull, that's brokerage platform, right down below in the description box and pinned comment. If you have questions about hollow candles, how to use Webull, a lot of other tutorial style content is already on the channel, so check out some of our other playlists and videos here. Trying to keep it simple to the point, but making it more educational, more tutorial based, so we can kind of dive into a lot of different things and get more out of these videos. Thanks so much for watching, and we'll see you guys in the next one. Peace.